Yo! How we doing, y'all? Previously on Kimba TV. 3, 2, 1, Kachoya! Let's go! Easy, 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 easy. We already talked about, could this be the third drive, timing, you don't want to grab all the single prints. If you're bullish, you're going to see what the reaction is here or here, and you're going to look for some sort of bullish retest, right? I bet that's golden pocket. Sayal, thank you for the resub. Ono Bono gifted a couple subs. I see you, Ono Bono. Mex, thank you for the resub. Ono Bono, hey, Ono Bono gifted like 10 subs. Kachoy! Let's go, Ono Bono. How y'all doing? Any questions, Lions? Happy Thursday, y'all. The math is the math. What do you guys think? 3 drives. Shout outs to everybody that took that swing fail short. The only other thing that I can see is the swing high, swing low, nuked through golden pocket, bounced from 886, bearish rejection from the golden pocket. Obviously, that's a bad low. Yeah, so if you're not in a swing fail 3 drives short, value area high might be a little bit better, but settlement bearish retest could be an opportunity. So I don't know if this would really be a good RR. Clearly you have this going on. And then untested naked point of control. So you've got this for maybe like a swing fail. Got a couple opportunities. I don't know which one's gonna play, so we'll have to see which RTH gap or how the RTH maneuvers. But you've got this, you've got this. This could go lower. I don't really know, and then this could go higher, maybe like 103, 105. So a couple of plays there, and then yeah, maybe the swing fail. You have some CVD divergence building up, so maybe the swing fail long. Like 98.2, 98.1 getting grabbed. There's a single print right down there, though, on CME. Can we get here? Come on, come on. Can we get here? Come on, come on. Let's go, turn it up. Kachoya, come on. Kachoya. Kachoya, come on. Let's go. We juice it forever. Let's get it. Let's get it. Yeah! Hey, who juicing? Who juice shit? Let's go, let's go, let's go, let's go! Are you ready? Kachoshima, bitch! Let's go! Let's go! It's easy money, Lions! Come on! I'm gonna, last papink for me is gonna be right here. Alright, a little scalpy, Any questions, ladies and gentlemen? You guys Gucci? How do you play stop when taking a trade like that? The 0.5 fib? Exactly. Yeah, so you would be, a lot of people are gonna, this is where you have to kind of make up your mind, okay? So, it had a chance to swing fail. The problem is the volume is actually real. Okay, if it was gonna swing fail the volume, you would have wanted it lower like this. You don't want big volume candles on a breakdown or a break up. Okay, so, you know, structure probably had a very low chance to be able to do a swing fail. And so for me, like if I wanted to get a long, it's either here or here. So make sure you get caught up on the 15-second alpha TA in the morning. It would have been nice to get like a CME reaction as single print, but yeah, it doesn't look that great. So we'll have to give it more time. Like no reason to long this, obviously. Not yet anyways, unless this 30-minute candle close in 25 minutes can hold it. But yeah, I would probably prefer the VWAP. So, all right. Yeah, but you kind of just have to do what we did for the morning TA and formulate your plans, identify levels. When it gets to that level, you're reading the data. All right. Carson says, what is 15-second alpha TA? Like I'll show up, I'll do TA for like 15 seconds, and it usually is pretty alpha. So go to the YouTube, rewind, and listen to what I said in the morning, the levels that we identified, the edge that we're looking for, and we'll go there. Alrighty, so 25 more minutes. You can compensate with time if you don't have enough edge. So I Marcus smashed RTH gap opening. Nice. Yeah, the RTH gap is another like easy play too. I really wish it would have come lower. The thing about hidden divergences, and it's the same for bearish and bullish divergences, but this could have come here and it would have still been a hidden bull div. This could have come here and it still would have been a hidden bull div. This could have bounced from here and then come back and made another lower low and it still would have been a hidden bull div. So you'll rarely see me take something like that, especially if single prints are getting grabbed or like it's losing a trend line. But if, for example, it had done a lower low and a regular bull div showed up, oh, that's automatic. All right. Bugatti math. Juice is the juice. So chat, same thing. Same categories apply. If I get structure and all of these ding-dongs get squeezed out, then I would have open interest, CVD bear div, and structure. But if I don't get any of those, or if I only get one of those, then there's no short to take and we're patient. And we sit there and we wait. And then if it is, for example, like a failed auction, if that's a bad high, am I gonna take that? No. If that's a good high, I will take that. Okay, if I'm confused with lack of edge or S&P is pumping or whatever, then I will take this one or the structure doing a bearish retest. So I'm all ready to go for the next 6 to 36 hours. You guys Gucci? We talked about TPs. So really the only difference moving forward is that on the 100K to 1 mil challenge, because I'm going to start scalping on this, by the way, you'll be able to see the market smash. You'll be able to see the market smash short, me putting my stop loss right away, getting stopped out, tiny profit, waiting. When it breaks the trend line, market smash long, moving my stop loss to break even. But the thought process, why I waited that long, right? Why I didn't put blind limits at 7.5, like it's all gonna be the same shit like today. And then you can, take the opposite of what we just did and apply it to the reverse, but the edges that I'm looking for, right? They never change. And it's really just blending that together with juice. I don't know how many of you guys were watching the charts last night, but like, I forget where it was, but like initially I was in a like part of the 3 drives short, and I saw like a 18 or $19 million bottom short come in, and I put my stop loss like really conservative, and it pretty much pinked me. So unfortunately, like, and it wouldn't even matter now because I would have gone stopped out in profit like back here. But, you know, I could have had like a really nice Pico top short to be flexing. But Murph says I did the same thing. Did you guys know what I'm talking about? No, I think it was on Bybit. I mean, it was just a bunch of goofy ass bottom shorting. It was last night. It was like 9, 10. It was right before I was going to go to sleep. Yeah, but whatever it was, like I had a short and then like I saw it and I was like, oh my God, this fucking guy. And so I put my stop loss like a little bit before like a 382 retracement, and sure enough. Yeah. But how we doing, Lions? We locked in? Where we at? What are we doing? Okay. Value area high. All right. So anyways, let me finish but when you're in a short, you say it's bad that shorters come in after the drop. Correct. Yes. So if let's say that it does this, okay? And I get into a short here. Okay? I don't want somebody to short into a hidden bull div. I don't want somebody to short into a 7.5 Fibonacci level. Will you look at that? I've been doing this shit for how long have you been trading? Long enough to do this? So because the motherfucker's trade, risk reward wise, is so statistically and mathematically fucked up that he's probably going to get liquidated. Okay? Things move like this. All right? And the real kicker about that Trevisto is that it's leverage, my boy. Okay? If you want to like talk about I'm bearish on this asset from a fundamental perspective, then do the fundamental thing and Warren Buffett up and sell spot and buy spot. If you're going to be trading leverage and margin and derivatives, it's not about fundamentals, especially for that day anyways. Okay? Higher time frame, sure, but it's really more about where's the edge. Like who is like where's the liquidity? Where's the imbalance? That's why a lot of like day traders, they love like mean reversions and shit like that. Just looking for an equilibrium. You know, it always finds equilibrium. All right. So if it's too cheap or too expensive, it's going to eventually come back. It's just a matter of when. And that journey, the bing bong ding dong through that journey, everybody gets wrecked because they're too over leveraged. So, okay, I think I understand now. You don't want it because they'll get liquidated as force buying, drive price back up. Exactly, Trevisto. Now, Trevisto, if there's no bull div, okay, and there's no bullish edge that's going against, then I'm all for that motherfucker shorting right there. Let's go even lower. I just don't want him to be putting his money into a losing edge. Does that make sense? Now, if there is no 7.5, right? If there is no single print, if there is no VWAP, if there is no any reason that like a hidden CVD bull div, if there's no reason for it to bounce from there, okay, he's free to short that bitch and help me break levels. All right, but I don't want him shorting, especially a lot of money. Okay, it's different if somebody bottom shorts 300K and he's the only idiot doing it versus collectively there's 100 million across exchanges. Okay, but I don't want somebody to bet $100 million that it's going to go lower than that price when clearly the sells are getting absorbed. When clearly the sellers are getting exhausted. What the fuck is that guy doing? I want to shake the shit out of him and be like, dude, that's a losing trade. You're fucking me. Why? Where was that 18 million with me at the top? The fuck are you doing? So now he's shook. I'm shook, and I got to protect my ass because he wanted a bottom short, or he wanted a top long. And that's one of the other points that I always try to make about, you really can't like signals group this shit. Because I could tell you, hey man, I want to take this bitch all the way up to here. Or hey man, I want to take this all the way down to here. Right? And I could give you TPs, but I'm never going to know if somebody wants to bottom short or top long 50 million or 18 million like last night. You know? And you got to read the data accordingly. I'm never going to be able to future predict that exactly in 3 hours or 4 hours or in 6 hours or 8 hours, there's going to be a bear div or a bull div. You guys need to be able to see it. You guys need to be able to call it, anticipate it, and then see if it's worthy of taking a shot or not. Okay, maybe this guy didn't know and like he's kind of helping me, and some of these are helping me, but like the Tweedledee and Tweedledum right here, not cool. Like around this point, you got to start to think, because anytime, I can't draw on this, but this and this, these are your CVD points. So once you lost this point, okay, you're already thinking to yourself, dude, any pullback is going to make a huge CVD bull div. Do you see it? The CVD bull div, the pivot anchor point is right here. That level is right here. So you already could tell from this on the pullback, okay, that, oh shit, I want to start looking for a long. What the fuck was that? All right. So you can hear my planning in the morning. I would like to short to be able to either long this or long this, right? That was the plan for this morning. You know, and it just went a little bit lower where I had to be patient and wait. You know, the easier one would have been to not take all of the single prints and just do a quick swing fail. Trend line would have been even perfect. That's a no-brainer, right, chat? That's a no-brainer. Right? But if you're going to lose the trend and you're going to grab all the single prints, I'm never going to put blind limits there. I'm always going to wait for either the trend line to get caught back up, the yellow line, or the golden pocket getting turned into support. And then in terms of the timing of it and the specific execution, do you want to wait for the bullish retest, or you're willing to pay that extra a little bit of money to just have the position in case it doesn't do a formal bullish retest? How bullish are you really? That's it. Same concept up here with the single prints up there, right? So I'm going to be thinking the same thing. If you really are bearish, it would be better to not grab all the single prints. Okay? If it does this, like market smash, it's easy for me. If it grabs all of them, I'm going to have to be patient, just like down here. Okay, just in case it wants to do this, especially if none of these dickheads have closed, right? Right? Now, can you tell that the price is almost at equal highs and look at the CVD. So just like how I was saying that when you broke this CVD low, okay, you could already start anticipating a CVD hidden bull div, right? You can already start, this is the pivot point here. So as long as you stay below this pivot point, this can go as high as it wants. It'll be a bearish CVD, bear div. Make sense? So you can already start anticipating. Divs are lagging, but you can anticipate, especially when it's this obvious. Look how close the price is, okay? And look how far away the CVD value is. So if you get, again, same thing like down here. If you get structural edge, if we get structural edge, like a swing fail, if we get open interest edge, it might be top longers, opening longs. Ideally, it's all the shorts getting stopped out because I don't want to be in a short if there are people that are underwater in shorts right when I fucking get in. Like I said, you're dollar cost averaging with other idiots around the world, right? You're not supposed to dollar cost average on your own. Imagine dollar cost averaging collectively as a bunch of idiots. No, I'm not doing that. So, if we get structure and if we get open interest edge, obviously, you know, as we get closer and closer to US market close, S&P confluence will die off, but sure, like let's also throw in S&P being a little bit bearish too, right? That would be nice. And last but not least, divergence.
My trainer, he told me.
Right, so SPY, confluence, structure, open interest, SPY, and then last but not least, divs. Like I said, being able to anticipate. All right? And so that's it. And that's just the planning aspect of it and anticipation aspect of it. You know it's not going to be that easy. You know you're not going to get all four. You might only get one. What are you going to do? That's the planning. What if you only get open interest? What are you going to do? What if it's a swing fail, but it grabbed all the single prints and none of the open interest indicates that shorts are closed and it shows that they're still underwater? What are you going to do? You're going to have to make the decision like on the fly when the bullets are flying in real time. You're not going to have time to wait for me. I'm not going to have time to tell y'all. All right. This is as far as we can get, like as a group. You know, once the battle starts, it's like everybody is responsible for fighting their own opponent. You know what I mean? So does everybody feel like they're prepared? And does everybody feel like they know what they're going to do and what they're willing to risk and what they're chasing after? Let's go ahead and start making higher highs and higher lows. So all I would really need to see from S&P, all it is, let's just do that. Get above that and we Gucci. Get above that and we Gucci. Then we're not anymore. How's that? Get above that. Give me a 5-minute candle close above that. It's not good enough to pierce the GEX. Okay, Bugammas have changed too. Let's take a look. Yeah, so it's standard distribution. And, well, not really. This isn't, but it's okay. I think we would be nitpicking. We can still keep an eye on 6,005, but let's just consider it standard distribution for now. And so you're going to go with the biggest Bugamma, which would be like around 59.80 or 59.85. So let's do 59.80. Take that off, and 6,005, and then GEX flip is 59.50. So we got to be objective. Maybe they are flipping it into support, right? GEX flip is at 59.50, so we got to be objective. It's the data tells us what it is. So if it's at 59.50, I can't keep it at 59.55. You heard me? So yeah, this makes it even more important that we can see this, because you should be able to clean a higher high if it's above GEX flip. So all it did was it stressed even more importance about being able to actually keep the structure going. So let's see. Triple J's question, at an area I want to TP and maybe take a short sometimes, I hedge the full position. I feel like it helps with emotions. Do you think that is dumb or okay? Only time will tell. So for example, what's your P&L looking like? Is it growing and juicing? Is it growing and juicing? Like, are you talking about here? Did you hear exactly how I was going to shave and how much I would have left, etc.? And my concerns about how I think this is a little bit too high and, you know, maybe 101.5, you know, 101.4 would be a little bit better, 101.6. I don't know if you start to get into like 101.8s and 101.9s. Like you know how I feel about going beyond the halfway point between two levels. You know? So this probably isn't applicable, but just so that we have a frame of reference, you probably don't want to go any higher than that if you really want to short. And if you really want to short, I don't even think you want to go that high, like, because ideally you don't even do a full sweep of the single prints. Triple J, yeah. My juicy long is from 89.3. Ooh, Triple J. I feel you. For the whole position, it's up to you. There's no right or wrong, brother. Yeah, that part of there is no right or wrong, so you are free to do whatever you think is right. Shout out Ono Bono, by the way, for gifting those subs. We got Tito Poco, HZ Men, Tamer, Zazy, August, Swifty, Cockney, Texan, let's go. Pavel, Danny Bolat, 7 Romax. 7 Romax gifted 10 subs. Kaito Crypto, you heard. Ono Bono making it rain every day, everywhere. Kachoya! Oh, fuck. What are we going to do, bro? Steve says, was it an opportunity to take a head short on the top? It's kind of up to you, brother. So, me, I like to look at structure. Okay? I like to look at open interest. And I like to look at things like divergences. Okay, all the shit that we talked about before, all right? Maybe even like a little just pure math, okay? And we can go through each one. So structurally speaking, okay, the high is not the greatest. It would be a little bit poor and weak, okay? Because of how close these tops are. Okay, combined with the fact that you have imbalances right above it, makes it a pretty high probability that you're gonna clean this. Okay, that is one of the reasons why, if you do something that could potentially be a bearish structure, okay, and you don't grab all of the single prints because you were supposed to, then that's how like the momentum shifts back to like the bearish side or the bearish team. Okay. So from a structural standpoint, that high looks unfinished and you have imbalances, single prints. So like I was saying, Steve, I wouldn't mind, if we save that for tomorrow, or it could even be like, I don't want weekend, but maybe like Monday. Yeah, do you remember last week when I was talking about I don't want the low or the high placed during Friday? Much rather have it done on a Monday or Tuesday. So even if we get like a swing fail short tomorrow, I would still be kind of aware that most likely we get round tripped on Monday. Okay, so and it doesn't have to happen, but these are some things that I would keep in mind. So structurally, that's an unfinished high with an imbalance of single prints up top. So structurally, you don't really have edge that says you should short that. Okay, you know what would be great right here? Anytime that you have a lower high, you always want a higher high. So this would be the pivot point right here. Okay, it's also the break off of the triple div, the bear div. Okay, so you don't really have like a bearish div. So, aside from maybe like smaller time frame stuff, but right now, like this would have been great, if it had been a little bit different structure. Okay. So from a, div standpoint, you don't really have, okay, you might be able to spot like a 5 minute or something on like one particular exchange or something like that. Maybe like Binance, you could make an argument, or Bybit, you could make an argument, but, yeah, for the most part, like it's kind of inconclusive. Does open interest give you any sort of edge? Not really, because now they're back in like profit or break even, but you have about 49 million now in shorts from that wick high. So so basically what you're seeing is you have 49 million in shorts. People right there. Their stop losses are right here. Their single prints are right here. Okay? And the structure doesn't look like it's good. All right? So from a structure standpoint, from an open interest standpoint, from a divergence standpoint, you don't have much edge to short, Steve. All right. What you do have is the mathematical rotation. And I was trying to break this down to you earlier. You're going to see this a lot. Whether it's the 7.5 to 0.5. Okay. So what you're going to see is the price will go like this. It'll go like this. And then it's going to try to figure out if it's going to actually turn golden pocket into support and go, or if it's going to turn it into resistance. Okay, so you're having the same thing happen here. So it pops through the 75786, it comes back, pixel perfect, golden pocket, and then right now it's going to try to figure out if it's going to make a lower low or if it can try to make a higher high. All right, Steve. So some people like to short that scalp, that quick little 886, to here, but with no edge, more often than not, something like this is going to happen to you. Something like this is going to happen to you. So it would have been a lot different if you had a reason to. Okay, music is too loud. Really? Better? Yeah, so could it dump without all of the edges that I like? Sure. Yeah, like there could be a cracked out, oil prince that is just going to get really excited and just market smash with 50 mil. I don't know if he's going to do that or not. Yeah, but as of right now, I think, because here's the thing. This isn't about this moment right now and what happens in this exact moment. But based off of the thousands of times that you're going to see a very similar setup, what do you do? So for me, not enough edge to short. All right. And if it dumps and I get left at the train station, I'm not going to cry about it. Now, Steve, you always should have a plan in case you want to chase something. Okay. So do you remember how I would play this, Steve? So the first thing that I would be looking at is this. However way you want to draw it, but like the uptrending line. All right, I would be looking to see this break. Okay, and how it breaks and when it breaks, and do these shorts that might potentially be in profit, do they close? All of those things would matter. Okay, because it might not necessarily, I'm not that big of a fan of diagonal resistance and support. I just have this here for kind of like a physical thing. But if we remove the diagonal and we just look at it purely from a horizontal resistance gameplay, because that's really what it is, right? Resistance, 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 breakthrough, support, break, right? So it's kind of obvious like why it bounced from where it did. Not only is it a pixel perfect 7.5 level, but it's previous resistance. And we don't get bullish on penetration, we get bullish on retest. So if this is going to hold, theoretically, you're going to make a higher high. Okay? So if it can't make a higher high, and if it starts to rotate like this, then I'm going to be looking at this as a failed auction. Okay? So if I don't take these when the highs are like that, okay? But do you know how I chase it? I want to see the reaction through the golden pocket, and then I want the 886 to bounce, and then I want to get in at the bearish retest, and I'm front running this. Like this. I would pull it from here, to the high, something like this. All right, Steve? Unfortunately, I wish more like all the stuff that we just talked about was more applicable right now, but it's Macaulay Culkin, which means that it's low volume and low liquidity. So let's go. Hey, longers, I'm rooting for you. Shorters, I'm rooting for you. Bulls, bears, we're all lions. Sato, tell them what happens if they don't use stop loss. I think we had a little bit of a baby F, but I had to resume it to get a proper outro. Lions, salute! I'll see you guys tomorrow bright and early. Kachoy Shiba. Yeah, he reaving. Youngsoon, he reaving.